Are options income strategies good for beginners? The honest answer. Hey, I'm Brian. I'm from NetPicks, and today I want to answer another question that we're getting from some of our subscribers. Yes, you can use option strategies as a beginner. It is absolutely a great way to generate income, right? There are great options income strategies out there. Better still, these strategies are not difficult to deploy. Once you understand the mechanics behind them, they're very easy to set up in your account and trade regularly. However, and this is where most beginners run into problems, is they don't understand the risk you're taking on. And I'm going to explain that in a little bit more, but you want to understand the risk, what you're being exposed to, and to find success, you want to sidestep those traps, right? So let's talk about the truth about options income strategies. There are three primary strategies, things like covered calls, cash secured puts, credit spreads. I'm not going to get into details on how to put these trades on. That's not what I'm here to talk about today. We have a bunch of that information on our blog or in other YouTube videos that we put up. But covered calls, cash secured puts, credit spreads, these are all standard ways to generate income using an options strategy. They're very easy to deploy. And once you figure out one or two and you do it steadily, you're going to really understand that you can generate some good cash. The problem is most beginners don't think about the risk profile, and that's a difficult part about trading options. So just think about options income for a moment, right? You're making trades, these options income strategies are trades with very high win rates. It's not uncommon to see 60, 70, 80, and sometimes even 90% win rates. And people want to use these as a paycheck replacement, right? They're looking at them as steady cash flow. But this is what beginning traders get wrong. These are not bonds. These are not dividend stocks that are paying out on a regular basis. The problem is every once in a while, you're going to run into a drawdown. A single loss, often in these strategies, can wipe out multiple gains. So it's all about risk control. If you can control the risk, these become less risky strategies and the steady income becomes more valuable. There is volatility in these trades and you need to be aware of them. Just remember that that single loss can wipe out multiple gains. So, when you place an options income trade, what you're essentially doing is you're trading cash flow, the premium that you collect for taking on risk. You become essentially an insurance company. And I really want you, I love this idea, this mental exercise of thinking of yourself as the insurance company. An insurance company collects thousands and thousands of tiny little premium payments every month. And occasionally they have a loss where they have to replace $1 million home because it burns to the ground, something like that. So think of that as most options income strategies are exactly like that. You're going to have lots of little premium payments. You're going to collect these premiums, but occasionally you're going to have a big loss, right? And that's the same thing that happens in options. And I've got a chart below here to show you what I mean. But let's assume the stock's at 30 bucks, right? So this is an example of what a stock looks like at 30 bucks. You're going to sell a cash secured put for 75 cents or $75 per contract. That means your break even is $29.25. $30 stock, $70, 75 cents per share, $75 per contract. Your break even is $29.25. Now, as you can see from the chart, you're good in the green until you start getting below 29 bucks. So where's the real exposure here? Well, if this stock goes from 30 to 15, so it literally gets cut in half overnight, your loss could be $1,500 or more. I mean, if the stock goes to zero, you could lose $3,000, right? So you have to do the adjustment of, is the premium of $75 per contract that I'm going to collect worth taking on this risk? Now, in reality, most stocks don't go from 30 to 15, right? It's a very rare occurrence, but it does happen. So you just have to be aware that that possibility is there. More likely what's going to happen is you might put the trade on and the stock might drop from 30 to 28 or to 27, in which case you'll have a couple $100 in losses, but then you'll own the stock, right? It'll be put to you at the $30 price point, and then you go from there. So just so you're aware, that's what it looks like when you do a cash secured put, right? The key takeaway is beginners are always focused on premium. They're thinking, oh, I'm going to get $700 this week and $700 next week. The pros are focused on risk. They're thinking, am I being paid appropriately for the risk I'm taking on? And that's what I really want to encourage you to ask yourself when you're thinking about an option strategy as a beginning investor. Am I getting paid enough from the premium to take on this risk, right? And so here's where beginning options traders go wrong, right? They're not understanding the risk. Remember, you're going to be acting like an insurance company. So that one's a given. You want to understand what your maximum risk is. The other thing is getting seduced by easy wins. You're going to have, remember, premiums. You're going to have lots and lots of little premiums, right? So you're going to have win after win after win, 70, 80%. One of the challenges is that makes you lackadaisical in your research or when you're doing your trades or what kind of premiums you're willing to accept. Another problem is losing focus. I see this all the time. You know, you'll put on a trade, you'll put on a trade, you'll put on a trade, and you're making you're clipping those little bits of coupons, but you're really looking for the excitement, the activity. I know a lot of people really get amped up about that, but losing focus is not a good thing when you're trading for income. So, one of the other challenges is you start easing up on risk controls. You start having win after win after win. And a lot of times you're like, oh, I'm going to win. I'm going to start upping my position size. You start taking on more and more risk. And that is a huge mistake that many beginners make, because what ends up happening is you put more and more capital to work, the trade moves against you, and all of a sudden you're taking a big blow to your account, right? It does happen. You're going to lose money on a particular trade. You have to be aware of it, right? Another problem that beginning traders have is getting emotional, right? This is math. Trading is all about mathematics. And what you need to do is try to put emotion to the side. We're all human. You're all going to get excited about wins. You're going to get disappointed about losses. You want to put those emotions to the side and trade based on what you know, right? Another problem I see beginning traders do is they're forcing trades. They think, oh, I need to make money this week, even if the premium values are down. It's not worth it. Don't place a trade just because you need to put a trade on. That is the worst way to trade. If you're locked in and you're forcing trades, you're going to start picking bad trades, and then eventually you're going to lose money. And then the last thing is chasing lost money. I know a lot of beginning traders think to themselves, well, if I lose on this one, I'll double down on the next one, or I'll double down on every time I lose. That is backwards thinking. If you're chasing lost money and you're trying to increase your risk, you're taking on more and more risk in the hopes of recouping lost money. That is a recipe for disaster. Take it from somebody who's seen this time and time again. So what I want you to learn, what beginning traders should learn before trading options for income, is understand the options mechanics. Really get into the details of how a trade is structured. Look, a covered call is pretty simple. A cash secured put is pretty simple. When you start getting into credit spreads, sometimes there can be some complexity between, where you're putting your strike prices and expiration dates and how far away from the price it is. So really understanding those mechanics so you understand what risk you're taking on is number one. Number two is position sizing. This is the biggest issue I see with people with small accounts, right? They have a risk it all kind of mentality where if you have a small account of only $1,000 and you're trying to generate income, they're going to throw it all into one big trade. And what ends up happening is they win a couple of times, and then sure enough, the one loss out of 10 shows up and they get hit and their account gets wiped out. Don't do that. Stick to your position sizing as you're trading in small accounts. And there's a whole bunch of different ways to do position sizing. It really makes sense for how big your account is, how actively you trade, how experienced you are, and what kind of risk profiles you're taking on. So I can't get into that here, but those are just some of those things to think about. And then, the other thing is traders who think that they can trade and they're uncomfortable with losses, right? Their goal is to, I never want to have a loss. That's not reality, right? If you're going to trade, you're going to have losses. You need to build it into your strategy and you need to be comfortable with those. So the final answer is yes, you can generate income and use very easy strategies for beginning options trades to generate cash flow, right? These trades are easy to place. They're not very complicated. You'll get along with them super well. However, you really need to understand the risk profile. You need to understand what kind of risk you're taking on. Don't overcommit. Don't blow up your account, right? And in these types of trades, risk management is critical. So if you like this information, we have a bonus report on options. The link is in the description below. Click that, download it. You'll find it really useful. I promise. Download it. You'll find it great. Have a good day.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk